Hey, how's Monday after the test drive?
Hey, Scott, Steve, what's going on over there in your neck of the woods?
I'm just feeling like holiday trading. I'll explain in a minute.
Oh, yeah, the holidays are upon us, and we've been absent for a couple of weeks while we conducted the test drive, but we're back now. So, without further ado, welcome everybody to the November 23rd edition of Office Hours. I'll be your host for the next hour, Jamie Hodge, and I've got my wingman, Steve Gomez, in here as well. So let's just go ahead and get the legalese out of the way here, and just want to make sure that everybody in attendance is aware of the fact that whether it's this webinar or any of the other webinars we have coming at you on a normal week, it's all about educational. Okay, it's all educational. Educational purposes only, I should say, to make the attorneys sleep a little bit better. So what does that mean? It means if you want investment advice, if you need somebody to tell you what to buy, when to buy it, all that good stuff, just please do yourself a favor. Seek out somebody like a registered investment advisor or a Series 7 licensed stockbroker that can, in essence, legally dispense buy and sell information to you. So everything we share with you guys is for educational purposes only. I think that'll work. And I always like to take a little bit of time here, especially since we've probably got a lot of new users in the webinar today. Take a little bit of time at the top of the hour here to let everybody know about the community that we built around the TI technology. And let's see, where did my pen go here? There it is. The trading room. Let's see if I can get my pen to work. There we go. Trading room hosted by Mr. Barry Anderson. Barry opens the doors about 30 minutes before the open of the markets every day. It is a great place to go and learn and interact with other traders. Could be 300, 400, 500 people in there on any given day. It's a great resource because of the price, basically is zero. But more importantly, Barry Anderson is the moderator of the trading room, and he does an excellent job at showcasing the way he uses TI technology and his trading style, and he also doesn't mind answering questions. So traders from all skill sets in there, beginner, intermediate, and advanced. So if you have not been taking advantage of that free resource, I would highly recommend it there. Hold on one sec, ladies and gents. In addition to that, obviously, we've got the 5 p.m. Eastern webinars coming at you. Of course, today is Monday, so you get myself and Steve. Steve's going to take the steering wheel tomorrow for the trade of the week. Andy Lindelof is going to ride shotgun with him. Wednesday, good old hump day rolls around. We like to change it up just a little bit. We got Dan Mirkin, the CEO and founder of Trade Ideas, along with our Chief Technical Officer, Brad Williams, in there, typically giving you a little peek at new features and new tech that might be coming down the pipeline. And our tech pipeline is chocked quite full for the new year. Should be some pretty interesting stuff making a debut in the new year, and that's just right around the corner. Andy's going to round out the 5 p.m. Eastern webinars with the Trading Studio, and I'm going to ride shotgun with him. And our ever popular, ever growing daily support session is taking place every Monday through Friday from 12 p.m. to 1 p.m. Eastern. So on the next slide here, you'll see how to get to that daily support session. This is a static address down there, trade-ideas.com/live. These are conducted over YouTube. So Barry gives up the mic in the trading room for the YouTube broadcast, and we hop in there from 12 p.m. to 1 p.m. Eastern, answering any questions that you might have about TI. It's typically a different educator trader in there on each day of the week. I happen to have Thursdays, but you get a different person on Monday, Tuesday, Wednesday, and Friday. So a great place to get your questions answered about anything TI related. In addition to that, if you're a new user and you have not watched the TI University 4-part series here, you can go to our YouTube channel and just type in University, TI University. These will come right up. These are excellent videos to get you over the learning curve a lot quicker than not watching these videos. So all the way from beginner 101 to advanced 401, a great series of videos that you can easily locate on our YouTube Trade Ideas channel. Always like to show our subscriber growth over the years. 2016, right here is when we introduced the first AI module. Of course, we have 3 of those now. Hopefully there's going to be maybe a new one come online pretty soon here. Of course, all the 3 AI modules are geared around intraday. At present, we hope to have a swing trading module coming out soon. Keep our fingers crossed. But as you can see, over the years, user base just continues to increase. Would think we're going to see more of that in the new year as well. And in addition to that, those of you probably already know that our Brokerage Plus module is compatible currently only with interactive brokers, allowing you to trade through our interface instead of their interface. And of course, we feel that our interface is a lot cooler, a lot more intuitive. Just allows you to get the job done in a lot quicker and more efficient fashion. In addition to that, you can do some automation through Brokerage Plus, whether it is a strategy that you have fabricated, or you might want to automate some of the AI strategies. That's totally doable in Brokerage Plus. So currently, as I said earlier, it's only available through interactive brokers, but we have in the testing phase the Brokerage Plus version for Ameritrade. And hopefully after a little bit more testing, that will be ready for release. And what's exciting about that is that's going to be the first foray into the $0 or the zero commission broker dealer world, the Ameritrade version of Brokerage Plus. So that's going to be very exciting. It's a big game changer when you don't have to pay those commission fees. So stay tuned, and hopefully that's going to be out sooner than later. All right, and here we are to today's agenda. In keeping with tradition, I'm going to hand the mic over to Steve in just a second. He's going to talk about the overall major tracking ETFs, where we went, where we might go, all that good stuff. And then we'll get on into the content that I prepared for you guys today, which, you know, the Holly recap is pretty much a compulsory routine here. And boy, Holly did not, she didn't disappoint today. Some really good trades being produced by the AI today, some good add-on opportunities, and we'll talk about those here shortly. Depending on how much time we might have once all that is done, we're definitely going to talk about back testing. I've got something really, I think it's pretty cool that I'm going to show and hand out to you guys. And if we have time, we're going to revisit the Nifty at the 50, which is a top list that I handed out. I think that was back on, let me just check my calendar here. I think that was back on the 26th of October. And then we had the following week where, looking at the price alerts that I handed out for that webinar, they were just kind of ebbing and flowing, not up or down a whole lot. But since we've missed the past 2 weeks as far as webinars go, boy, those things took off like a rocket and produced some pretty good gains. So if we have time, we'll revisit the Nifty at the 50 as well. So without further ado, Steve, if you're ready to take it for a little bit and show us what you got as far as the major tracking ETFs, I'm ready to kick it over to you.
Yep, I'm ready. I got my mute button going. I forgot to use that earlier. I apologize.
No worries, no worries.
Supposed to mute when you clear your throat, Steve. All right. Okay, here we go.
We all do it.
A lot to talk about here. This is the screen that we left off because it's been, like Jamie said, 2 weeks. And last time we left off, I said, you know, this is either going to be the most epic double top we've ever seen and the most hindsight 2020 type stuff, or it's going to be an interesting wedge break higher following the initial direction. And of course, we all know here we are. So 2 weeks into now, we've just popped through. We've kind of definitively said we wanted to break through that wedge, and now we're in that holding pattern. And I tell you, boy, there's that 10-day moving average just really corralling the price here for the most part. This looks so juicy. I mean, like it's almost just waiting for something out of left field from the Fed or vaccine, who knows. The market seems like it's just sitting there saying, all right, I'm ready for my pitch. What do you got? So we'll see. Personally, I took a lot of profits today, and I'll show you why in a minute. But the main backdrop here, which includes all of our financial, energy, tech, the S&P 500 is the one to look at. It's just kind of poised and waiting for something. But I'm about in 65% cash maybe in my swing account, and just kind of waiting for further confirmation, because what I'm going to get at don't want to get too bogged down on this. NASDAQ, kind of more of the same, broke through, sideways action, really nice little reversal wick there, possibly, maybe. You know, got to pull the arrow backwards a little bit sometimes to shoot it higher. So the same thing, NASDAQ's in a holding pattern, waiting for something. But the story is what we've just always laughed and talked about is the IWM. It's just is you outperforming. If you haven't caught this, I'm sure you have, because you've seen the tea leaves and all of the names that have been just going crazy. And I want to remind you, you know, Brian Shannon reminds me, he has a, maybe he didn't coin it, but he reminds me, we call this the silly season. Anybody listening knows, that's been traded forever, knows that when we get around Thanksgiving and Christmas, the small cap stuff just starts to go nuts. And I've got a theory on this, Jamie. I think it's like a lot of people are off and they're logging into their accounts and they prefer to trade the small stuff, and they love to trade stories they know or can get their hands around, like electric vehicles perhaps, you know. So it's just been an amazing week. Last week was probably one of the best weeks I've had all year, because you know, being in the names of things like Plug and F-Cell, they've just, I mean, you can just pick them left and right. They're everywhere. SunW, alternative energy, Ride is the trade of the week. We'll talk about that tomorrow. But there have been so much movement. Clean energy, I'm in this. You can see a sell tag there. Reason to take profits because there was a prior resistance back here. Left some on the table, and after hours, it's doing great. I'm probably going to clean out the rest of it. Yeah, clean up. Play on words there.
Wow, we're at 470 post market. Okay,
yeah,
all right.
Yeah, I'm going to clean out the rest of that probably on the open tomorrow and just take that gap, because it's just a matter of time. That's what I'm getting at here, guys. Just a matter of time before this parabolic fear of missing out retail extravaganza that we're having, we call it silly season. It ends, you know, one of two ways. It's either going to come back to the 10-period moving average on their respective parabolic charts, or they're going to start doing things like, I guess I would do if I was the CEO of a company like maybe Ballard Power, say, that's been a pretty good move. Let's sneak in a secondary and base and peg our secondary up to closing price. That's the kind of risk that you're going to take when you play these small cap names and you play with the musical chairs. So the idea is to participate in these things, and boy, have we ever. I can't even think of all the names off the top of my head, even some of these blockchain stuff, Riot and Mara. You can see I took a sell off in that as well. Trying to just piecemeal out of these small cap names and be the person who's not running and screaming for the exits once the music stops, because that's no fun, all right? So an unbelievable week. Individually names, we can go on forever. You guys could type in names forever because there's just too many. I only scratched the surface. But the point is, the small cap has finally taken the lead. Small cap has finally taken out its pre-COVID, well, there's pre-COVID. Even before COVID, it couldn't even get past its pre-high. So we're back to all-time highs here today in the Russell 2000 in the small cap stuff. So, you know,
Steve, how long have, you know, going back a very long time, you know, that's something that we've always talked about. Well, the IWM still way far away from all-time highs, and then boom, 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 just like in a matter of
exactly. And we laughed about it coming up the rear. All of a sudden it's leading, but it's leading here in silly season, which is always the retail extravaganza of fear of missing out. People's on their Ameritrade, TDs, their E-Trade accounts. And I think they're chasing a lot of interesting stuff, and it brings a lot of froth and fire and parabolic moves into these small caps. And, you know, Ram brings up TGC. And I'll say that doesn't look bad. My first checklist is look over here. Crude, petroleum, and natural gas. Oh, interesting, you should say that. Because I entered a trade before the close today in our account along with Jamie. He saw it entered. It came from my A table junior. Is it in here? Where'd it go? Should be in there. It is AR. Okay, AR is a natural gas. I didn't know what it was, but look at that little chart. It's just kind of sideways consolidations, trading up a little bit after hours, and it might be that natural gas and crude petroleum, small tech, TGC might be coming into play. Ram, you bring up a good point there, because I think I might have noticed the same thing today. There we go. So let's keep an eye on these. How would we use trade ideas to keep an eye on this? I'll just take that rough high right there, right click, create a price alert, and I'll keep an eye on that one tomorrow, and that's active. And another thing I might do using trade ideas technologies, come over with similar names here and double click and sort by the low cap stuff and see if there's things that I like on this name. That was interesting. So a couple of little cheats there for you, but yes, these small cap names, not to get too off the beaten path here, because we can do that, IWM, Russell 2000, that's the story. We're all-time highs today. You know, this stuff could very well continue all week and maybe even into December, barring any crazy left field stuff that's coming out, you know, on the election. That's always in the back of my mind. That's one of the reasons I'm not in 100% invested right now. That's why I've got some dry powder, just to kind of wait and see what happens a little bit. But in the meantime, you can play these small cap stocks and really get a good bang for your buck, because last week was pretty darn good. So that's where we are, and I'll have probably a lot more to talk about this kind of stuff in my webinar tomorrow. I'll give it back to Jamie because I know he's got a lot to talk about.
Yeah, good stuff, Steve. Thanks a bunch. Let me get this back. And yeah, you know, I just went ahead and pulled up TGC on mine as well. Notice the purple line there. What should I do here? Get rid of it, pull it back, purple line's gone. I'm thinking to myself, wow, you know, big gap up day. Then we're just kind of going sideways, but it is getting interesting. You know, we're about to get above, butting right up to the 1022, but what might be a good entry? You know, what might get me to go ahead and push the button? And this is where, you know, once again, Brian Shannon anchored VWAP. Click on the little anchor here, anchor it to this day right here. And look, we've got a nice little line to tell us, okay, we get above this line, boom, it might just be go time there.
And Ram also mentioned the F-Tech. I didn't pull it up, but that thing closed strong and it's up another, geez, 50% after hours. So these things are absolutely crazy. If you're in these things, you'd probably want to take some off the table in the open tomorrow. I'm serious, because that's what I'm going to do in CLNE. The rest of it gets cleaned. If it opens like that tomorrow, I'll take it in CLNE. Those are the ones you look back on and wish that you had done that. I'm telling you.
Right, and you know, that leads perfectly, Steve, into the demons that we traders all face every day. It doesn't matter if you've been in the business a month or 20 years. You got to satisfy the greed and the fear demon, and the best way to do that is to peace out and go, okay, taking profits on this, I'm going to risk this and see if I get a bigger run. But that way, you know, you're splitting the difference there. You know, just
keep a few shares if you want to on the radar, and then you have a trade around opportunity next week, or if it lines back up, if that 10 period catches back up after 5 or 6 days of consolidation, you got yourself another opportunity.
Absolutely. Okay, getting on with the rest of the program here. I've got to give the compare count a little bit of credit today. Meaning this guy right here, the big cap movers. And if we just kind of take a quick peek in here, this is only looking at stocks hitting a high or low that are market cap minimum of 4 billion. Cool thing about TradeEd is now you don't have to put all 9 zeros in there. By the way, if you want to put in 4 billion, you just go 4B. That's going to get it done for you. Moving forward, nice little addition from the coders. Thank you very much. But the bottom line is I like to watch this window, see what the readings are after the first 15 minutes today or every day. And today, these are the readings. Pretty darn bullish. Okay, 61%. Anytime that bias gets above 55% to the up or the downside, then my ears start to perk up. 57, 58, even more. But when we get past the 60 threshold, you know, usually it's pretty accurate. And typically the moves can either come immediately or they come later in the day. We were all talking about this earlier in the day amongst all of us trainer guys. And, you know, I referenced a day last week where the counts were extremely heavy, but we just kind of went sideways and the market puked it all up at the close, right? It's like, yeah, compare counts called it again. It was just a delayed reaction. And we kind of had the same thing today, okay? Because if we check out the SPY here, we did take an initial leg up, but nope, pull the rug out, the old banana, the tailpipe, and we, you know, come down here and put in the bottom. But then as we were grinding back up here, as soon as we reclaimed, and where did my pin escape to? Things always jumping around on me. There we go. As soon as we started flirting with the 10 period right here and we reclaimed it right here, you know, I shared some thoughts with the boys. I'm like, yeah, this looks like the reverse of the other day. I think we're probably going to take that little pop as we close in on the close. And sure enough, look what happened there. Okay. Of course, we gave back a little bit, but, you know, we had the gap fill and then we had a nice recovery and the market did finish up slightly. So that was good information from the compare count window today. Helped me set my expectations. Close would be. So good info on that guy. All right, I don't know I got a gremlin in my system today. My pen keeps disappearing. There we go. So just wanted to point that out real quick. And now let's go ahead and talk about the AI Holly. Holly did not disappoint today. So 3 things I'll typically like to point out: how we might be able to extract some of the moderate and conservative spread that sometimes materializes, and we've got some really good examples today. Also, decent add-on opportunities, and POLA and JMIA presented themselves with some, well, the charts presented us with some really good simple auxiliary patterns that we could have added on to those positions after the AI signaled them. And then the third thing typically is trade arounds, which we're typically dealing with stocks that have been stopped out and then observing how those stocks behave around those stop areas. Didn't really have any examples of those today. Had a couple that got stopped out, but they just kept on going. They didn't, in other words, the stop area did not act as a pivot point, thus the nil comment down here. So let's go ahead and take a look at some of the ones that had some nice moderate and conservative spread. And just for the new people that might be in here, I see the crowd has increased since we began. So definitely probably a lot of new users in here, and welcome everyone. But if you direct your attention to my all trades blotter here, we've got conservative profit, moderate profit, and over here we can see aggressive profit. Now, just to quickly encapsulate the difference between these risk modes, conservative mode, obviously being the most conservative of the 3, 5 different reasons why the AI will take itself out of a trade. And if I show the end here, we can always see over here the reason for the conservative exit. So real quick here, conservative, either a profit target gets hit, stop loss gets hit, or the timed hold expires. Those are the 3 primary reasons. But it's got 2 audibles it can call, the AI, in the form of profit save and reduce risk. Here we have a profit save up top here. We got a reduce risk down here, which permits the AI, for lack of a better term, to exit a winner or loser earlier and not waiting for the stop out, the profit target, or the timed hold. It's kind of like a modified trailing stop. Sometimes they're timely, sometimes they're not so timely. In the case of POLA today, you can see a 0.00 in the conservative sell here, okay? In other words, the AI flatted the trade, but holding it to the close. And by the way, let me clarify, all the figures that you're seeing here are based around $100 risk per trade, then the system sizes me accordingly. Okay, so we're risking $100 per trade. If we would have held to the close, could have made $431. So probably some of you sitting out there go, man, that kind of sounds like me. How many times have I gotten bored, or maybe the fear got to us and we're like, yeah, I've been sitting in this thing for a long time, I'm just gonna flat it instead of lose money, only to have the thing turn and burn and go the way that we wanted. I think everybody's been there numerous times, and you will be there again. It's just part of the game. But the bottom line is this: checking out the chart up here, we see the entry signal coming pretty early in the day. Note the time. This is about the earliest the AI typically starts trading, about 5 minutes into the open. This one occurring about 6 minutes, 13 seconds to be exact. Nice little entry signal right here at 5:38, corresponding with the blue line in the blue box. And then for the following 45 an hour or so, the shaded area right here over the next 30 minutes after the entry candle is the AI exiting the trade, basically for a flat down here, right? Not such a timely exit, but notice the action. We got up immediately, up, back down to flat, up, back down to flat. Typically, in my book, that's a good sign. We were never in the red, never acting like it's even gonna go flirt with that stop loss area, which is the red line. So in this case, you know, when we see the AI exiting, and it always flashes, and if you have your audible alerts turned on, you can hear it as well, thinking to yourself, well, the trade's working thus far, I don't really see any need to exit. In other words, you're gonna ignore that AI conservative exit signal because the trade's working, and we're in essence gonna take more risk because we like what the trade is doing, and we would have been handsomely rewarded in the case of POLA. Now, another thing I really like about this trade, not only do we have statistical probability being issued by the AI at the 538 level, we had a secondary pattern emerge on top of the AI signal in the form of an opening range break. So 1, 2, 3, 4, about an hour and 15 minutes in. Notice we had the low down here. I'll just put a line for easy reference. Marked off our high up here. We go range bound, and then right here at the 9:30 Central Standard Time 15-minute bar, boom, we cracked that level. So this would have been a great time to add to a position. You know, especially you new folks out there, you probably always hear, cut your losers when you're supposed to, add to your winners. Well, adding to your winners is not such an easy game. But when you see a secondary pattern like this potentially emerging, because before this bar occurred, we have the potential for an upside range break. Here, it actually occurred. So breaking through this level right here would have been a fantastic time. How was the volume today in POLA? It was strong all day, and it finished at over 2 on the relative scale, okay? So when we start stacking up things like this, number one, an AI signal where we've got statistical probability, the potential for a secondary pattern to emerge, coupled with massive volume, or not, can't say massive with 2, but 2 times above normal, that's good enough in my book. You know, when you start stringing things like this together, boom, you can really capitalize on it, and POLA is the epitome of that today. So just a fantastic trade, nice opportunity to add to that position, and decent volume, coupled with statistical probability from the AI. All right, good deal on that one. Now let's take a look at the next one. Decent spread here too. Difference between $126 based on $100 risk and 300, and let's round that up a penny to 350. That's a lot of money left on the table if we took the conservative exit. But this one, not too shabby. And I could say the same thing here, but it was a little rushed. I mean, you really would have had to have been paying close attention here. But we basically have pretty much the same thing occurring in this one as well. If we mark off the highs and lows, except it did it in 45 minutes, 15, 30, and 45. We got the buy signal right here, 27.21. Check out the volume on this guy, finishing almost at 14 relative volume. So just like its friend up here, Pola, same characteristics, statistical probability from the AI, raging volume, potential for a secondary pattern to emerge, which it did here, took a nice little leg up. So this little area right here would have been a decent area to add if you'd have liked to tack on shares there. Now this one not behaving quite as nicely as POLA, took a nice little pullback here, but never even really got back down to the entry level. Kind of made us wait for the remainder of the day before finally reclaiming. You know, we got a little bleedy on the 10-period green line there, but thing kept it propelled, acted as a trampoline, and then boom, some really nice closing action in the BL and K. Blink, another electric vehicle manufacturer. Blink Charging. So not a bad trade, kind of what I like to refer to as a 3-star trade with the statistical probability, secondary pattern emerging, and decent volume as well.
Just off topic, Brian Shannon gave me one to watch today. It's a FIII.
Let's pull it up. Let's take a look.
It's coming out of the, I don't know how he finds these obscure names. He bought some and it started to do something.
Oh, FIII.
Yeah, III. I mean,
now.
that just like pulled back a lot, but boy, just crazy names coming out of the closet.
Let's do this real quick. Everything I pull up now, I'm like, I don't know, did that work? Yeah, this little anchor button's a little fidgety sometimes. Huh, I've never had that happen before. Usually it'll anchor it automatically. It's behind the candles here. You can barely see that.
You know what I would do? Go to the
right
15-minute and anchor from yesterday's open, or yesterday, 2 days ago, the first candle on
right,
that big gap. Brian,
okay.
Brian showed me how that works a lot better.
Yep, we'll just anchor from here.
Uh-huh.
And then there you go. The purple line. Notice what happens, you know, stayed well below it Friday. Got the little gap up, kind of hugging it all day, but then look, you know, so you got kind of a double clarification here when you're using this anchored VWAP. That's a beautiful range break nonetheless. But
when he showed it to me, it had done like 54,000 shares, and I'm like, I'm already in profit-taking mode. That's too thin for me, Brian, but it came to life.
Yeah, and look, it finished the day trading 1.4 million, almost 9 times on the relative scale. So, you know, who knows when this little run's going to end, but it probably ain't going to be tomorrow, you know, or the rest of this week. Who knows? But, you know, when they do decide to capitulate, there might be some really good opportunity to the old downside. Probably getting a little ahead of myself there, but all right. Now Jamia, JMIA, another tasty trade. No pun intended to our friends at Tasty Trade from the AI, with another auxiliary pattern emerging after the AI signal here. This one nice and pretty. 1, 2, 3, 4, 5. Another hour and 15 minutes, just like POLA. So we get the statistical probability with Holly here. Chance of a secondary pattern unfolding. It did unfold, so great add opportunity here. We could even add another line up here for a second edition if we wanted to, depending on how aggressive you like to be. Not only one add opportunity here, but 2, as both of these levels were breached. How'd we do on volume? 1.73. Not nearly as good as the others, but hey, the price action is all, in the end, it's the price action that we care about, and this one played out beautifully. Once again, notice the 10-period SMA, boom, just tracking it all day here. So another 3-star trade from Holly, big spread between 17.12 and 271.20, and we still got to take a look one more time at this little guy right here. Probably the least attractive of the Holly trades that we've just looked at, but hey, a winner is a winner, and that's a pretty decent spread there between 33.24 and 150 bucks, let's call it, between conservative and moderate. Not a bad little call here. You know, I like the wick down here, and you know, sellers took control, got right down to that 10 period, but they could not keep control. Boom, right back up. AI kicks out a buy signal, kind of hemmed and hawed around the entry line for most of the day, but paying off towards the close. Notice what happens here. We lose control. 10 period loses control for about 1, 2, 3, 4, 5, about an hour and 15 minutes, but it reclaims it here, and then boom, once that happened, acting as a springboard, kicking it up to not quite back up to session highs before the close, but still yielding a pretty good profit there of 150 bucks. So about 120 something, we'll just call it $120 spread between conservative and moderate on the HYLN. Now, you know, looked at the winners. As I said earlier, there were no good trade around candidates because notice the stop hits here. And then notice the value that we're seeing in the aggressive column, which continues to track until the close. So if we're risking 100 bucks, boom, stop hit. Saved us a little bit of money. If we would have held it, we would have been down 76 bucks. But no surprise that this was a short trade today, and that was really not the flavor of the day. So let's see here. I'm on the right one. Yeah, YRCW, shorted it here, blows right through the stop loss area. Doesn't really look back. Now, if it would have chopped around below that stop area, then I might have had an interest in what we call a trade around. Hey, we got stopped out, but it seems that the stop loss area is holding the stock down. Not the case in this one, and certainly not the case in CRE either. I mean, look at that beautiful. I mean, this looks like one of the EVM manufacturers today, but they're in the semiconductor field. Been around for a very long time. Used to trade CRE, Steve, back in the old SOS days. But anyway, we can see the short here quickly getting stopped out within probably 15 minutes. Now, this one could have been tricky. You know, it was toeing the line right here at the stop area. But if we would have tried to re-enter it here, no dice again, would have been a 2-time loser as this thing just cranks on up. Never really, 10 period, never lost control on CRE either. So no good examples of trade arounds, nothing acted as it should around those stop areas to entice me to re-short. Of course, keeping in tune with the market, you probably weren't paying a whole lot of attention to shorts today anyway. And I think that does it for the Holly recap here. Yeah, didn't miss anything. All those guys. Let me do a little time check here. Okay, so considering the fact we got about 22 minutes left, we'll probably have to just skip the Nifty at the 50 because I really want to share something with you guys that I kind of put together yesterday when I was doing some scanning. So everybody that's familiar with the product is already aware of the odds maker, which is our back tester here, but you're probably not familiar with what I'm about to show you. And before we start on this process, just kind of want to bring up a quote, and I got to give Steve a little credit from this. It was probably years ago that Steve used this example, but it's a good example for today. You know, Michelangelo, the sculpture is already complete within the marble block. Before I start my work, it's already there. I just have to chisel away the superfluous material. So he sees it. He just has to chip away what's not needed, right? He's not creating it. It's already there. He's got to chip away the excess. And we can pretty much say the same thing about back testing in some capacity. So what I've done for you guys is I've created a block of marble that I'm going to give to you guys. But first, I'd like to give you a little peek into the creation of the block, okay? Because, real quick here, just to give you a little taste. Now, this is designed for swing trading. If we look at the hold time here, we're looking at a hold time of get me out at the open day after tomorrow. So it's just call it a day, call it a little bit over a day depending on when you make the entry, right? You make it in the middle of the day, it might be a day and a half. You make it at the close, probably just a day, right? So swing trade is what we're definitely after here. I'm just gonna go ahead and simulate buy for now, just to give you guys a peek. So keeping in tune with the block of marble, this block of marble has many things hidden within it. And it's up to you guys to get in there and do some exploring, shave away all the excess, because the excess are all of the trades, right? So the trades make up the block. Now, look at these results. Nice spread between average winner and loser. We got an average winner of $1.40. We got an average winner of 72 cents. We just got really good numbers here all over the place. When we look at the daily, a lot more winning days and losing days. Green days are much bigger than the red days, so we're on the right track. But check out how many trades are coming through this scan. 3,073 trades, okay? That's a lot of trades to have these types of numbers present, okay? So what that does is that gives you guys plenty of time or plenty of opportunity to go in here and do some optimization, chip away some of that excess marble, get this trade count down to what you feel is manageable. That's going to vary from person to person. Some people might want, oh, by the way, the number of days back tested here, I believe I stuck to my favorite, which is 40 days, but you can go more, you can go less. I would expect the numbers to relatively hold up there. But 3,000 trades coming through in a 40-day period, the goal is to get it to a manageable amount, going and doing a little optimization. And there's plenty of trades in here to pare down and get to a reasonable number, but a reasonable number is going to vary. You might think 200 over a 40-day period, where somebody else might think 500 or 100, but you'll find your balance there. So to get a data set of this nature and still have this many trades is pretty unique. Okay, this is the block of marble, but how did I arrive here? Okay, this is what I'm going to end up giving to you guys to have some fun with, see what you can carve out of this block of marble. But how did I get to this point in the first place? Because if we look at the filters, that's quite a lengthy filter set. And you can see I did some preliminary optimization to get here. But what was my thought process to get to this point, right? And I didn't know what I was going to find until I started the process. But what I did is I started off very basic. What do we have to do first? First, we always have to kind of come in here and let's see. Well, I thought I blanked all these out. Let's see here. But I restarted my layout. So what did I start with initially? Initially, I just started with, if I get rid of these guys. Okay. Bear with me here 1 second. Okay. Initially, I just started with my basic filters. Okay. Minimum, maximum price. I wanted volume to be there. So I manually inserted relative volume of 2 from the get-go before any optimization took place. I want my data stream to be clean, especially when I'm back testing. So that's why I'm using distance from inside market with a value of 0.2. I don't want ETFs and iShares. That's what I'm using the earnings per share filter for. Automatically weed out the ETFs and iShares. And I had to start with at least a little minimum 5-day average volume because I don't want all these thin, weird things coming through. So coupled with relative volume of 2, along with 300,000, I surmised that would be a pretty good place to start. And I think I was right on that. So this was my initial filter setup. But what I did, instead of just back testing and then going to the optimization tab, what I chose to do first is optimize by some, well, pre-selected columns. Because what a lot of people are not aware of is if we go into backtest and we go to the advanced tab, notice right here, use columns from strategy or use all available columns. Most people are always operating in this mode right here using all available columns. But the range filters, the position and 5-day range, 10-day range, 20-day range. And Andy was always harping about this on his Thursday webinars about how you can find some really cool stuff just using the range filters or the position and range filters. So that was my initial idea. What I'm going to do is I'm going to set up the columns, and then I'm only going to use the columns from the strategy in my optimization process, right? So these are all the columns that I started with, 5, 10, 20-day range. And then I threw in some VWAPs. And I really didn't know what I might find. That's why I included distance from VWAP and VWAP and the dollar form here. But this was my first round of optimization. Okay, so here I have the initial bulk scan. Notice we're still green, which is a good thing, but our success rate and our profit factor are nowhere near what we just saw in the other one. So what did I do? I went over here to my optimization. Of course, I'm not saying ignore price and time of day. I will say ignore symbol though, but sometimes these things just jump out at us. But when you go to other filters, then you only have those filters that you want to start with in the queue for optimization. So then it's just about, okay, well, let's check out the 5-day range first. Looking at intervals of 20%, that might be a little too big. Let's look at intervals of 5, or we could even go smaller. But when I do that, what jumps out at me? Boom, this cluster right here. If the minimum is, and actually not even 0, but using a minimum setting of 5 and a maximum setting of 19.99, that's probably where I want to start for 5-day range. Now you might be thinking, well, these guys down here are still green too, but they're green, but not near as green as what we're seeing right here. So I easily make these changes. I don't have to go back to the config window. I just right click and say, all right, let's do 5 on the min. And let's do 19.99 on the max. All right, so that takes care of 5-day. What about 10-day? Once again, it's popping some crazy amount in there, so we just got to shrink it down a little bit. Okay. Position in the 10-day range. Very similar to what we just saw. Nice little green pocket here. Get down here, trades diminish, performance falls off the cliff. So, you know, we could make the decision to take the really, really juicy stuff up here, or maybe just include all the green here, right? I tell you what, we'll take, and this might not be exact to what I have in my finished version that I'm going to hand out to you guys, but I'm just trying to get you familiar with the concept here. We'll mark off those areas for the 10-day, and now let's look at the 20-day. 5% once again, and here we have more of the same. So we'll block off minimum of 10 for the 20-day. And then we'll map out that for the max. Okay, so now I've got all my ranges adjusted. Once I do that, we pop back in and we say, okay, well, what did that do for us? I was like, wow, that was quick. That was quick. I was looking at the wrong screen. Okay, so we're at 43.7 success before. Spread between winner and loser wasn't quite 2x. Huh. Now, I believe in my previous version, I went ahead and did the VWAPs first, okay? And that's what ended up yielding the final one that I'm gonna hand out to you guys. But the process goes like that. First, you block off, and keep in mind, these are just the favorite columns that I thought might yield something interesting. But you guys might have other ideas in your head. And keep in mind, the list is long. So if we go back in here and just tell it to show all the columns, or excuse me, all the filters. And those of you that are familiar with the backtesting process already, you know how lengthy the filter set is, but I'm just gonna let this spin real quick here because the process goes something like this. You optimize by your favorites first to chop off a lot of the bad trades. Then once I had all my VWAPs and my position and range filters dialed in, then I enabled all filters. Then I went back through the entire filter set and only lopped off where I saw large chunks of trades that could be dropped off, okay? So if we come back in here, now you can see, here's the whole list, right? So in this finished version here, what I'd like to point out is all of the range filters, 5, 20, and 10, along with any of the VWAP settings that you see here. And let's see, yeah, and when I did my VWAP optimizations, this was the only one that really dropped a large group of trades. And when I say a large group of trades, after I got my initial columns optimized and I went through the entire filter set one by one, I didn't mess around with when I saw I could eliminate 50 trades or 100 trades. I only went for the big numbers. Oh, I can make an optimization here and drop off 400 trades because this trade count was a lot bigger initially. But that's how I set it up. I did my favorite columns first, and then I re-optimized by going through the entire filter set. And it's a little bit different of a method to go about, but from what I can tell, it yielded some pretty good results on this one. And like I said, you guys might have different ideas. So all of the ones outside of the VWAP and the position and range, 20 changed from 20-day SMA, position in 9-month range, position in year range, today's range. What was the change in 20 days? I found this one very interesting too. Scrolling through the filter set. Oh, well, if I just, anything that comes through where the decimal value is 0.09, just didn't work. Why is that? I don't know, but that's what the stats are telling me. So as soon as I pumped the decimal up to a minimum of 0.10, above 0.09, it dropped off a lot of trades and it really improved the performance. So the bottom line is, until you get in there, roll your sleeves up, start doing some experimentation, you never know what you're going to find. And I've been using this for a very long time, and I've been meaning to go through this process. And finally got down to it last night. And so a lot of trades in this one. Okay, so let's just rerun one more time, make sure this is the right version. And then we'll go over the risk management as well. Cue the Jeopardy music. That makes me think of Alex Trebek. Love that guy. Okay, so here's the version that you guys are gonna get, all right? Nice daily, tons of trades to weed out. What is the stop loss that's being used here? Once again, we've already went over the hold time, which is at the open, day after tomorrow. But there's a lot of different combinations I have not tried yet on here. So feel free to explore hold time, number of days to be held, risk management on this, going back to the basics, $1. Why is it $1? Because that's what shows as the best risk, okay? You're either gonna get stopped out pretty quick, but the ones that don't, you know, flux around at that level, they're gonna go, all right? So, you know, a lot of people are like, well, I like to use 1%, 2%. Yeah, but what the stats say is if you use 1 or 2%, you're gonna get stopped out a lot more versus using a constant amount of $1, kind of going the other way of what I used to be. Once again, it's a 40-day back test. And even more interesting, we can take this alert, or we can take this window, we can duplicate it. This one was originally configured using new high, but watch what we do here. We can go grab another one of my favorites. I know Steve likes this one too, 25% pullback from the high since the open. Okay, well, what if we plug the same filter set in, but instead of using new high, we use 25% pullback from highs? How would that work? Okay. Completely different alert, which means some trades are going to overlap, but you're going to have some in there that weren't produced by daily high, and you're still going to get really good results. Okay, well, what about something else? What about stocks that are crossing above resistance? How would that work with this filter set? Well, let's try it out. And while this is running, I will say that these are really the only 3 alerts that I've attached to this filter set. New high, 25% pullback from high since the open, and crossed above resistance. There's a lot more alerts that you can plug into this thing, and I wouldn't bet a whole lot of money on it right now, but I would bet you some amount that there are some other alerts in there that will yield results just as good, maybe even better, but you never know until you get in there and try. So keep that in mind. Plug in new alerts, try different hold times, go in there and do some optimization. Notice how small the trade count got compared to the 3,000 mark that we're looking at with new high, only 786 trades. On this one, what do we have? 22,980 on the pullback, over 3,000 on the new high. So I hope you guys have fun with this, not only on the optimization side, but also plugging in new things in the form of alerts to use that to hone down the marble, to find that beautiful sculpture in the form of a bag of money, maybe. You never know. So what I'm going to do is I'm going to drop this link into the chat panel, and we'll just call it the marble block. So a very nice base for you guys to have fun with and hopefully produce something that is highly productive. And I do believe we're right about at the top of the hour there. I knew that the back test, exploratory back test would take a lot of time here. But hopefully you guys see the potential in this thing here, and hopefully you can take it and turn it into something beautiful. Lots of different ways to do that. So get in there, mix it up, see what happens. If you get anything good, let me know.
Right on.
Any questions that I need to address before I kick it back over to Scott?
No, they were quietly attentive.
Okay, perfect. All right, having said that, Scott, if you're ready to walk us on out of here, maybe tell everybody about the juicy discounts that we got going on at the time. We're ready for you. Let me find my, where did I go? There we go. Well, it appears that my browser is hiding from me. Where'd you go?
And Scott's on
There.
mute too.
You with us, Scott?
All right. Yeah, thanks everyone. Thanks, Jamie, Steve. Just a couple items on the way out. We've got an ebook, very helpful, all about how to take advantage of earnings season. We're going to be replacing this ebook offer with another one on future webinars. So grab this one. We're reminding you to just go to trade-ideas.com/earnings. Got a podcast. We've released some really insightful interviews this year already. So go ahead and check out those and add us as a subscription so you're ready to catch the next one as soon as we release it. Just go to your favorite podcast app and search for Trade Ideas Podcast, and it should pop right up at the top of the list. We've got a discount. Fall savings is still in effect for the remainder of the month, so grab that code and use it to save 15% off your new subscription or upgrade. And if you want to look for Jamie on Twitter, he's at QuantBot. Steve Gomez can be found at Today Trader. Also look for at Trade Ideas, and Trade Ideas Pro is the Facebook handle, so like us on Facebook. And any questions at all, send them to info@trade-ideas.com. And we're going to put this recording up on YouTube later on tonight or tomorrow, and you'll get an email from GoToWebinar tomorrow with a link to the playlist where you can find it. Thank you, Jamie and Steve. Thanks, everyone. Have a good rest of your day.
See you tomorrow.
Thanks, everybody. See you tomorrow.